Hello, Facebook. I'm Karen Snow, head of East Coast Listings and Capital Services at Nasdaq. Today, I'm thrilled to introduce Betsy Atkins, three-time CEO, serial entrepreneur, and founder of Baja Corporation. Betsy's also a published author and visiting MarketSite today to launch her new book, Be Board Ready. Betsy, thank you for joining us. On behalf of Nasdaq, we're honored to have you here and so excited to be a part of your book. So at Nasdaq, we launch a lot of companies. As companies think about going public, the CEOs in particular, many haven't been on public boards before. What advice would you have for the CEO?
I think it's critical that the CEO actively participate in the selection of their three core anchor chairs. You'll have an independent audit committee chair, an independent compensation committee chair, and an independent nominating and governance committee chair. And it's really important you pick people who have chaired these committees before, who've ideally been through an IPO before. You can add members later who have less experience, but you really need your key chairs to be people you have confidence in, good alignment with, and who have been through multiple situations, because you need people who can calm the board if there's a hiccup, who have seen a lot of different scenarios, so that you have a great team to support you.
Mm-hmm. And given where we are in corporate America and more pressure on the board to think about diversity and whatnot in the corporation, how should a CEO think about the composition of the board, not just from, I guess, what we would think of diversity in sort of the traditional sense, but also skill sets?
So I think that, typically you think of diversity as gender diversity, but there's a broader way to think about it. Of course you're going to need to have gender diversity. The institutional shareholders who are going to own probably 70% of your stock, those 10 or 15 index funds, they require it, and they'll give you a big ding if you don't. So why would you go astray of what's important to your big owners? So certainly you ought to aim for 30% gender diversity, or get there pretty quickly. But diversity is diversity of thought, cognitive diversity. Certainly I would imagine all your NASDAQ listed companies do half of their business outside the US. How about some global diversity? How about tech-enabled tech diversity? How about ethnic diversity? How about people who have been from your industry, but people who have been through your growth trajectory and journey, who've been through the, say, 200 million to 500 million growth journey, who can bring that thought to the table. So you need a set of experiences that will help you with the opportunities and thinking through the trade-offs, and then help you in case there's a challenge or two.
Mm-hmm. You talk a little bit about technology, or a lot of bit about technology, given where we are. Can you talk a little bit about that and how a board should think about technology?
Absolutely. I think that people with a technology background are critical in every company, in every board. There just is not a company today, whether you're a manufacturer, a retailer, an insurance company, or a tech company, that isn't tech-enabled. You can think of technology in two places, both on the front end, your customer acquisition or customer journey, which is your mobile app, your website, the analytics and insights for targeting down to a segment of one. You can think about it at the back end. How do you take cost out of your supply chain? Maybe you do a reverse auction on the components you buy. Maybe you look at doing things that give you predictive insights on maintenance using Internet of Things sensor devices in your product. So you're going to tech enable your product or your service, no matter what the industry, and bringing that mindset on is critical. The second thing is people who come from a tech industry background understand change, because anything that has been innovated in Silicon Valley is often obsolete. There's an interloper startup coming up behind you in 9 months. So that mindset to embrace change, lean forward on innovation is very helpful, because corporations have to change more quickly to stay relevant today.
So you've been on 28 boards. which is just remarkable. Anything that you see coming down the pike in terms of innovation for members or the way board meetings are going to be conducted going forward? How do you think about that?
I'll give you a quick frame of reference on innovation in the boardroom. So there was virtually no innovation until WorldCom, Enron, and the big meltdowns. Pretty much in the past, boards were fairly passive and were more or less ratifying what was put in front of them in the 70s, 80s, whatever. After WorldCom and Enron, you had Sarbanes-Oxley legislation, which focused on internal controls. But now, if you fast forward, as part of the Sarbanes-Oxley, the one thing which was a surprising catalyst was they mandated an executive session. I know CEOs, you're not going to like this, but you're going to have to get comfortable. This is when the directors meet without the CEO present, and they review what they heard. What are the great opportunities? Where should we put our assets and resources? What are the challenges? What are the concerns? And coming out of the exec session, the board members got thirsty to understand the strategy better. They got more engaged. So now, as a best practice, companies do once a year, most companies, a multi-day strategy offsite. You look at the 1, 3, 5-year plan, the underlying assumptions, and the board members participate. Now, if you fast forward to today and what's ahead, we're going to see a pretty strong push on environmental, social, and governance. You used to just have sustainability, but now we have an umbrella of things that will be measured in environmental, social, and governance. Certainly diversity, certainly more tech enablement. You will also see trends coming out of Europe like term limits on boards. Will we, follow that model of having only 10 years? And you'll see this broadened description of the role of the board having a duty of loyalty to different constituents. In America, our duty of loyalty is to the shareholders. Now, of course, we're good corporate citizens. We want to play by the rules and be good in our community and have a purpose for our employees. But in the UK, the new proposal will require corporations to spend profit and require the board to actually have a duty of loyalty to the community, to the employees, and the shareholders. So we'll see if that gets momentum in the U.S., but that's a very different way of thinking about corporate governance.
Yeah, it certainly is. It's really asking corporations to start governing a little bit.
Yes. Well, it's mission drift, right?
Yes,
You're asking them to do what government does, put money into the community in a differentiated way than what corporations now do with their charity.
Right. Anything else as we wrap that you feel is important to convey to a CEO as they go public?
I think the most important thing for CEOs is to make sure you have good chemistry with anyone who comes on the board. You need to have a veto. If you just don't like the color of my eyes, you should be able to say, no, you're not for me. And you want to look for the qualitative judgment attributes. You tend to pick board members on a resume. You've had these experiences, but what you're looking for is judgment, engagement, courage in the hard times, the willingness to be a real thought partner to add value, and also do not put someone on the board who wants your job. There are Machiavellian boardroom assassinations. I've seen a few.
That's great. Thank you so much, Betsy. We're honored to have you here with us today, and good luck with the book. And thank you for watching. We look forward to bringing you more on Nasdaq Live.